Good afternoon, everyone. First of all, thank you very much for taking out time and uh, being available for us for this wonderful opportunity. A warm welcome to everyone. Uh, we're going to present today is the most recent opportunity which we're launching it today, which is based out of Bangalore. So my name is Abhimanyu Arora. I'm the associate director at hBits. I've been with this organization for 5 years. Overall 25 years experience, worked with banks like HDFC, HSBC, DBS Singapore, and Bangalore, DBS Singapore and Kotak. And myself, I've done my corporate finance participation course with IIM Calcutta. Uh, I have with me Mr. Sameer Bhandari, who is our co-founder and CFO. I would really like to welcome him to the particular forum and explain our, clients who have come from different regions of the world. I see still number of people coming up, so it's a little overwhelming. And Sameer, if you could just help us to understand, and if you can just tell us about yourself, as well as because you come from the great expert of global markets, being right now in Singapore, and you can just guide us about how it's happening there and overall market in the indexation.
Thank you, Abhimanyu, and a warm welcome to this webinar. My name is Sameer Bhandari, and I'm the co-founder and CFO of hBits. A bit of background around myself. I'm a chartered accountant and MBA from IIM Ahmedabad. I passed out in 1989. And then I worked with four of the bulge bracket firms. I worked with Bank of America in Mumbai and Hong Kong. I worked for UBS in Singapore. I worked for JP Morgan for almost 9 years in Singapore. And last but not least, I worked for Lehman and then Nomura for 13 years, where I headed sales globally across all fixed income and equities. I joined hBits 2 years back to accelerate growth. hBits, as you all know, is a fractional commercial real estate leading player. Uh, we effectively identify opportunities for investors like you, opportunities which make sense, which give IRRs of close to 15%. And that's really what we do. Today, Abhimanyu is going to present this opportunity which we have in Bangalore. But before I pass it on to him, I just wanted to give you around a context around what's happening in global markets and where do I think interest rates are going. Uh, in the US specifically, we've seen the jobs market slow down a lot. As you know, last few years, the Fed has actually been hiking rates. The Fed funds rate today is between 5.25% and 5.5%. And this, as you recall, 2.5 years back was around 1.5%. So the hiking cycle has taken rates up by almost 400 basis points. And the main reason for this has been the fight against inflation. Inflation, which peaked at 9%, today is hovering around 2.4, 2.5%. And most of the participants do feel that the Fed is going to start cutting rates in September. The Fed fund meeting is on September 17th and 18th. And the expectation is that either there'll be a 50 basis point cut or at least a 25 basis point cut. My expectation is a very high likelihood that they actually cut 50 basis points. Most of the data which has been coming out in the US has been weak. Though having said that, I don't think the economy is heading towards a recession. But obviously the data has been weak. The unemployment has been rising. It's now at 4.3%. And Fed always wants to try to stay ahead of the curve. And that's one of the reasons I feel they will cut 50 basis points in September and another 25 basis points in the next few meetings. So this year, I expect the Fed to cut by 100 basis points. And next year, I actually expect them to cut by 150 to 175 basis points. So Fed funds, which is at 5.25%, I actually feel it will come down to between 2.75 and 3%. Now, as the Fed starts cutting rates, most of the central banks across the globe also start cutting rates. And RBI in India is not going to be any exception. I do feel RBI will start cutting rates, and I would not be surprised if they cut rates by 150 to 200 basis points in the next 12 to 18 months. So, what does this actually mean for rental yields? What does it mean actually for property? I do feel that rental yields will start coming down. It may not come down immediately, but there's typically a lag of around 3 to 6 months' time before yields come off. So I do feel rental yields will come down. And as rental yields come down, capital appreciation happens. So the building which we are looking to buy, definitely I do think the capital appreciation will happen. So we are in a beautiful cycle here where rates will come down by 150 to 200 basis points in India. We should see nice capital appreciation, and we should also see rental yields coming down. So, this, I think, for the next, I would say, 18 months, 12 to 18 months is a fantastic opportunity to own grade A properties at a very, very attractive yield. And given this backdrop globally, I think this is absolutely the right time to do it. So let me pass it on to Abhimanyu to take you through the property. Thank you.
Thank you, Samir. I guess it surely signifies that how rental yield, though it might be coming down, property prices going up, but there'll be a great room of improvement further in appreciation, or when we do change contracts with additional uh, tenants. And that time again, there's going to be increase in rental. Yeah, that's a great news, and thank you for sharing that. So, uh, friends, what I'll do is I'll just quickly run through the slides. Okay. Post that, we'll run through a quick session on the Q&A round where you can just ask him questions. You can start typing now if you have any questions. So let me run through the questions. So right now we have opportunity which we are launching in Bangalore. The property opportunity name is London listed MNC. To talk about this, the key highlights, it's 8.75% entry yield, 8.55% the average yield. The expected IRR in the property is 15.12. The tenant is a London listed MNC. Well, just to let you know, which I will surely cover up in the coming slide about the tenant. The agreement is 36 months plus 36 months. The minimum ticket size which we're looking for the property is around 30 lakhs. Bangalore, we understand the market overview. So this is a very important slide just to talk about, friends. Uh, Overall, Bangalore has approximately a 13.1% vacancy percentage. So in a very nutshell, small, quick example, if I'm staying in one particular complex, it's of 100 flats, 13 flats are empty. Well, this is the story of the entire Bangalore concept. But when I talk about our location is CBD, if you look at the center, the orange color, that's the place where our location of the property is. And if you look at this particular slide versus Bangalore city, okay, it's 18.37%, and the CBD itself is 4.25%. That automatically showcases that how this property is in demand. Well, just an additional point, the one property which we are doing right now, the entire building is occupied. There is not a single floor which is empty. So if I just talk about the complex or the building, it's a 0% vacancy. Tenant overview. So we are talking about a tenant. The name is Smith. The group actually, when we go to any airports or any particular places where the security checks, so we go through some security checks and those machines, they are the people who are the supplier for this particular product. So they are basically dealing to aviation and other security systems. They are a London Stock Exchange listed company, founded in 1851, over on 3,337 million pounds. Well, just to let you know, though they are based in operation in 50 countries, they have 8 research and development centers, 21 global offices, 5 manufacturing sites, and 3,200 employees. Just one very important point, which we are just going to share with you, is that the center, the property which we are talking about over here, is not a sales office. It's not any other corporate office. It is basically a research and development center, which basically signifies that these people are over here and will be here for a very long term, because generally research and development centers, they don't leave the office because they put out very much, R&D machines, install the machines, and that is why this particular office is on the ground floor. Asset overview. It's a building structure is two basement, ground plus six. If as well, just to let you know, one more important point, just to share. If I see a lot of existing customers in this particular forum, and they are surely existing investors for our opportunity, which we did in Bangalore earlier, where the tenant was Toyota. We have picked up since we actually came to know that we were comfortable with the deal, and we saw that there's a lot of deals. The pricing which we occupied that particular property was really right. The tenants and the quality of papers were very right. So we actually got an opportunity to get one more opportunity from them, and we were very much open to take it, because this property was not even launched on anywhere in the market, and it just came to us, and it's really great opportunity that we have this opportunity for you. Building building facade, building lobby, and the car parking area. This was actually constructed by Vaswani Group. They have done 8 million square feet construction development across residential and other areas. Indeed, they have surely started construction in Delhi side as well, and Pune and Goa as well. This is the floor plan, a single floor plan, which you see it's total 12,776 square feet. A very important point, if we talk about as the location, it's just 2.3 kilometers from UB City, uh, 3.6 kilometers from metro station. Airport is just 36 kilometers, and we all know that how far international airport is in Bangalore. But if we look at this particular location, it is actually in the central business district of Bangalore, which is basically the location where right now there is no supply available, there are no transactions happening. Indeed, we are lucky enough to get this particular opportunity for us and for all our investors. People around the tenants, around the area, Microsoft, Toyota, Bosch, I guess we all know about the names. And so we are situated in the same location where all big brands are located. Again, a very important slide, which automatically signifies and as well gives a little touch point, what Sameer earlier mentioned. The average rental, which if you look at is running around 143 rupees a square feet in that particular location. We have put this particular details in the slide, and this presentation will be available for you. The slide which we are talking about, for us, the rental is 115.5 rupees a square feet, which we are getting. A lot of people might think that, why we are getting a lower rental. Well, it let me tell you as an example how it is good for us. It's basically 3 points. Number one, if we are getting a low rental deal, it's as well automatically possible that we will actually push down the price and give you a base price which is much better. So automatically, you are entering into at least a 10 to 15% discount to current market values at this moment. That is number one. Number two, since the tenant is paying a lower rent, automatically signifies that he or she or the tenant will not look around in the property or anywhere else, and try to fish around to switch. Number three, very good point, just to say, uh, the property, the entire furnitures and fixtures are done by the tenant. So these are the particular significance behind this particular location. Yeah, third point, which I was just thinking of, missed out. When there is a renewal of the contract, however, this is 36 months by 36 months, after that particular time, since Sameer mentioned how the interest rates are going down and the rental yield is going to go down and the prices will go up, well, it will automatically as well signify that we have a great room of improvement in when we do a contract with these guys. We can easily touch 150 or 170 when we do it after 5 years or 4 years. Terms and financials. 36 plus 36 months. We started at 1st November 22. 1st November 2025. So it's not a 36 months and then they're going to renew it again. It's an auto renewal date where the document is already stamped and registered. And it ends at 31st October 2028. Having said that, what we oversee that the tenant is going to be here for another 10, 20 years. We have collected 6 months security deposit. Just to as well let you know, the maintenance, that is the CAM charges, are borne by the tenant. Total cost of premises with everything put across is coming to 28 crore 80 lakhs. wherein stamp duty registration, advance property tax, legal fees, admin fees, reserves we put across are part of this. So if as a customer, when we talk about, let's say you want to go ahead and park in 30 lakhs, you become a 1% owner of that particular property, and you don't have to pay anything extra above that. And we give you ROI on the entire 30 lakhs when we talk about. You don't have to shell out any other amount. Indeed, as well, just to put across a very beautiful point, that for the next 5 years, we have as well already collected the property tax for 5 years. So you don't have to shell out anything from us, anything later. But this is the statement. Year one, year two, if you look at the sheet of gross rent, every year there's a rental which is going up. We have as well given a rental top up, which is approximately 1.5. What we see is that there is a 7% property appreciation in the year on year. Well, just to let you know, in that particular property, when we talked about uh, Jago, which was basically the tenant was Toyota, in that particular, we had taken a property appreciation year on year as 7.5%. At this moment, we have taken a 7%, but still we want to get conservatives as possible as possible. We still stick to that particular timelines. And even after putting that 7%, we are able to expected IRR at 15.12%. Sale price is coming to at 40 crore 56 lakhs. A cash flow is there, which is overall, if you look at and we multiply that in a nutshell, which is a very beautiful slide, this one, that if we park 100 rupees today, your 100 rupees will become 184 rupees in 5 years. So that's a price sensitivity towards to you, which of course includes rentals. But this again, I'm saying is our conservative numbers. And to give you a point again, why I'm talking about conservative, number one, the price which we are talking about, which we have added, wherein you are adding entering into 10 to 15% discount to current market values, is not added into that Excel sheet. Just to let you know. Number two, this area is actually giving around 11 to 12% if I how this investor is selling this particular property, and he sold us after 10 years, he's already made 3.5x of his money in last 10 years, which clearly shows that area is given around 12% return year on year. But in our Excel sheet, we have just put 7%. So that is the point where I'm talking about, where we like to put only conservative number over here. 1% management fees, these are our charges. 15% over 10% IRR performance fee. Well, investment thesis, how we chose the deal, evaluated, shortlisted, and we finally get into a transaction. That clearly shows that if we look at 100 properties or maybe 200 properties, then we get around one property or two properties for you. That has actually been the thing. There are many other things which we look at: the quality of the building, the quality of the tenant. I hope the tenant is not paying a higher rent. I hope we are not getting a tenant which is a property which is overvalued. So just to let you know, this property we get for around 18,600 or 900 rupees. Whereas a very big important point for your noting is that we've got the circle rate in that particular location is running at 19,600 rupees a square feet. Hence, investment thesis 8.75% is the entry yield, 8.55% the average yield, 15.12 is the expected IRR, lease is 3 plus 3 years, tenant is London listed MNC. Uh, no questions about that. It's a no brainer. Located in central business district, location a very close proximity to highways, railway station, and metro. About us, just to let you know, we have overall 400 crores AUM done. And thanks to all of you, as you all know, that prior to this, we listed an opportunity which was a $1 trillion opportunity. We are already 90% done. So there are just hardly one or two tickets or maybe five tickets left over there. If you guys want to invest over there, please go ahead and do that. And this opportunity is as well available for you for your, similarity to check that which you want to park in, or you can always diversify between two or one property. Uh, as well, to just to let you know that we have done a successful exit at 17.54%. Uh, Successful exit as a definition means that on that particular brochure, we had mentioned targeted IRR to be 15.54, and we delivered 17.54%. Automatically signifies that we are over here to give you the right positioning and the right money to your account, because you all are our brand ambassadors. The industry is growing. If we don't give you a right kind of input, right kind of a property, you would not refer us to anyone. But I know you all are here with a lovely response. So we're looking forward for great opportunity running with you. Investment process, all you need to do is log into the hBits website, do your KYC, sign up a EOI. EOI is basically expression of interest, which you show as an interest, show as an interest to commitment of that particular amount. And you have to just transfer 5% of your money to the particular escrow account of that particular SPV, which we create for that particular asset. Then we sign a particular document called passport. Passport form is basically a private placement document wherein you see investor name, your ownership percentage, your SPV details, your nominee details, your account number where the money is going to get rental every month. That's a legal document which you can cross. Then you transfer the money back to the escrow account. As during the time of the EOI, you have to just transfer 5% of the money, right? So that means if you're signing up for 30 lakhs, you have to just transfer 1.5 lakhs. What we envisage and look forward that this property should be done in another 10 days, okay, and 10 max 12 days. Already, as we see, we have got a great opening for this particular opportunity, and we are 20% done, sold out. So looking forward for your appreciation into this particular property and your participation in this property as well. This is basically how it happens, the entire structure. So we create a particular SPV for you in which the property is registered, and this SPV further issue you CCDs and shares. That's the basic. So you automatically get the co-ownership or probably the direct to ownership of this particular property. As well, just to let you know, this property, once you're an investor, your dashboard on hBits portal becomes active. You're able to see all the analytics on that particular dashboard, the inflows, cash flows, and everything over there. And that's how we as well happen to manage as an asset manager for your SPV. Yeah, this is what I was talking about, investment dashboard. So this is the dashboard, how it looks like. You can as well choose multiple properties. It shows your cash flows, inflows, that's what the money is coming to your account every month. It as well showcases your TDS reports. If since CCD gives you interest income, hence there is a 10% TDS cut. But yes, investment can come from any body, which is individual and non-individual. You can park money from HUF, individual. NRI, we have it around 35% base to invest from NRE or NRI or NRO account. You can park money from an LLP, private limited company, trust, NGO, and we welcome all of the investments. These are the properties which we have already done so far, uh, around 12 of them, and looking forward to add more numbers by the day. Well, we always look forward to have certain tenants. These are the tenants which are right kind of tenants in our portfolio. We're talking about ICICI Bank, Citel, among the top 10 IT companies in the country, support companies in the country. MAN is basically one of the top leader in the fragrances, and it's a French MNC. Ingenico e-payments is basically one of the biggest payment gateways in the world. IFL, we all know about the company. Audit Time is again a tech company, provides business solutions and banking solutions to the network. SmartWorks is basically a particular co-working space. However, here the subtenant was Persistent System, and so on and on. Well, I've already mentioned to you about the successful exit of 17.54%. Here, we again, just to emphasize uh, why we were able to deliver this. This concept of fractional ownership might sound like start a new concept, but we've been doing this business the last 5 years. However, as an industry, this experience in fractional ownership, or I should say commercial real estate business, we have overall experience of around 35 years, which automatically as well gives us a little experience in showcasing that what kind right of a product we need to enter. And that is why the right entry price point is very important. A lot of people talk about 7% interest rate, I need 8%, 9%, but we need to as well look at one more point, which is basically the right entry price point, because the glamour of entire fractional ownership is of course getting regular income into your account every month, but as well adding a point that at the end of 5 years or between 4 to 6 years, a good amount of income coming into your account. As I mentioned above, we delivered 17.54% income of the property which we exited. Well, here the core team and main big team, management team at the hBits. Uh, Mr. Shiv Parekh is the founder and CEO of hBits. He's a Harvard graduate, Stanford alumni, and he's been with this and he's as well, ex-City banker. So along with this, he as well owns a company which is Workloft, which is into co-working space. Along with me is Mr. Sameer Bhandari, who is our co-founder and CFO. We already heard from him. Uh, Again, just to put across, he's a chartered accountant. I'm Ahmedabad, overall 33 plus experience. Uh, so, lot more to talk about him when we go further. We have Mr. Vikas Verma, who is our CTO, Director of Engineering from Pharmacy Healthcare, and Somil, who has joined us as CMO approximately 6 months back. He's a Vice President, Growth and Revenue from Pharmacy. Well, we look forward to only tie up with certain companies which would brand not only bring reputation to this particular or what you call is confidence to this product, but as well as give a little what you call is a structural thought and the right kind of a vision to the particular product. So banking partners are ICICI Bank, taxation partners are Deloitte and PwC, leasing partners is JLL, CBRE, Colliers, Anarok, valuation partner again JLL. A very important point that since property is into picture, so we need to do a legal check. Well, we do a proper due diligence of the property. Hence, our lawyers are Shardul Merchant Mangaldas and Simon Mangaldas and Vadian Gandhi, among the top 5 law firms in the country. Data and research, all the data point which is mentioned in this particular slide are being taken from CRE matrix. Trusteeship company is universal. Technology, or I talk about how we work on the particular data points and communicating in terms with the customers, is through AWS, LeadSquare, and Zoho. Our credentials line of business, overall, we have done approximately 3,000 crore of worth assets managed, but that is as well with our parent company, which is Raycon. Uh, they have been done construction in India, Germany, and UAE. We've been in media quite a lot of time. In addition to this, just to let you know, Shiv was Forbes 30 under 30. So we talk about the right news with top right one which says inside hBits. This was the time when I was member. We had exited the property, so CNBC covered us in terms to how the successful exit happened. This was the latest one, the center one. And prior to that, when we had a partnership with Money Control, so we as well have a page on Money Control. Well, you can always reach us whenever you log in on hbits.co or your platform. You will be able to receive an email, a WhatsApp message, but as well, you'll be able to see an icon over there wherein it will show who is the person assigned to you, investment manager assigned to you. And you can always write to us or connect with us at any given point of time. We'll open to questions.
Abhimanyu, should I take some of the
Yeah,
questions?
please. Yes,
Because
please.
a lot of the questions are on SM REIT and this investment. So in this investment, the minimum is 30 lakhs. hBits has applied for an SM REIT license. It's been almost a week since we've applied, and we are expecting the license to come in around 2 to 3 months, I would say. But till then, we can't keep stopping our business. So we will obviously continue to launch. All these properties will then be actually migrated to SM REIT because SEBI will allow us to do that. So that's really the intention, that we would be doing that, because there are questions on why are you launching it under the old rule. That is the reason, because we are waiting for our approval to come. So all these properties will, yes, be migrated and will be listed. Now, there is a question around capital appreciation of 7%, which we've assumed. One of the reasons we assume capital appreciation is, firstly, we get 5% escalation of rental. So that's pretty much how commercial properties work. Unlike residential, they actually work on cap rates or rental yields. And that's why we are very confident, at least of that 5%. Secondly, we are buying this property a lot below market, of more than close to 15% below market. So we think that will also actually come in. Finally, we do think that interest rate compression will happen as I spoke about global markets coming down, I do think rates will actually come down and you will actually benefit. So I would not be surprised if the appreciation is even more than 7%. Talking about the building depreciating, this building is very, very well maintained. Plus, it's in CBD, which itself has a lot of value. Uh, there's a question around so performance fee after we migrate to SM REITs. The discussions are still going on with SEBI, and they haven't clarified that yet. What is the agreement start date? The agreement start date is in 2022, and it's 3+3. Is the LNL agreement registered? Yes, it is. So there's a question around the taxation when we exit the property, as this will be unlisted. So when if it's unlisted, the way the taxation works is you get indexation benefit, and you pay 20% after 3 years for long-term capital gain. Now, because of indexation, typically the capital gains is a capital gain tax is very, very minimal. All this is obviously changing because firstly, this is going to be listed on SM REITs. That's one, and long-term capital gains are now after 1 year of 12.5% without indexation. So that's going to be the new ruling. There's a question around how does the company view the current market cycle and how it's positioning itself to take advantage of opportunities or hedge against risks. We actually feel this is the right time to go aggressively and acquire commercial properties. And the reason being, it's the change of the hiking cycle. Last few years, we did see rentals moving up as we saw fixed deposit rates moving up. We do think this is a next 3 to 4 years. It's a very opportune time for the market. So that's one. Secondly, we are seeing a lot of foreign companies actually coming into India and acquiring space. They're setting up production facilities, and China, with what is going on with its problems with the US, a lot more companies coming here. So we do think that the demand for grade A space is actually going to explode. So we actually think it's one of the best times to actually enter the market. There's a question around reference of exit strategy and liquidity. Is there a lockup period or any restriction on share sales or partnership exit? No, there is no restriction at all. Presently, we have more than 100,000 users on our platform, so we help our investors exit. Once it's listed, you can exit your share anytime, and there is absolutely no lock-in period. How does SM REIT regulations affect this deal? SM REIT regulation will not affect this deal because they're going to grandfather all the existing deals done. And our plan is to basically migrate all these into the REIT and actually list it on the exchange. Is it SEBI approved? As I mentioned, we've applied for SEBI approval license, and we are very confident that we will get it within 2 months. There's a question from Priya, how safe is my money? Priya, I can assure you, your money is 500% safe. We have been doing this business for 5 years. We have, more, like I said, more than 100,000 users on our platform. So, and these are all completed properties. There's no OC risk. They are all tenanted. So the answer again is 500% safe. There's a question around the exit period, whether nomination facility is available. Yes, nomination facility is available. Exit period, typically we look to sell the property in 4 to 5 years time, where we see the maximum appreciation. There's a question from Kunal, what are the various sources of income, regular and capital gain in this investment? In this case, the rental yield which you get is counted as interest income, and you get tax based on your tax bracket. The capital gain, as I mentioned, is based on indexation. The minimum period typically we own the property is for at least 3 years, because that's where we see the maximum appreciation. Is the tenant client engineering firm smiths.com, Abhimanyu?
Yes.
So the answer is yes.
So I'm sorry, I was not able to look at the another screen. Got that rectified. And sorry, Samir, just want to add in more points away.
Sure,
So
sure.
Mr. Adarsh has asked that I would like to name of partner also to be added in the communication which goes to the client. Point taken, and we'll actually as well take that particular point, feedback taken. So, Mr. Sandeep Manjumdar, I guess I have had a word with you as well. Why are you likely to be listed on any exchange? Timeline. So as Samir mentioned that we have already, applied for the license, which should come with us another maximum month or maximum 40 days from now. We envisage that not only this property, any other property which is listed with us will be listed on the stock exchange between 8 to 12 months from now, maximum time I'm talking about. Mr. Parag Toli had asked, how old is this building? Will successful exit at good capital appreciation possible with such good old building? Well, this building is around 8 to 9 years old. Just to let you know, the longevity of any kind of a commercial building, which is basically a glass facade building, is basically around 50 years or 45 years. You can best take an example where you're staying or surrounding. Well, our thought process at that we are going to be in this particular product is between 4 to 6 years from now. A good part is vacancy percentage in this particular location is 4.6% as compared to Bangalore, which is around 18%. And in this building, it is 0% vacancy. Okay. And you're already entering at a very good entry price point. So yes, there's a very good chance that you will really could receive a higher number what we are actually predicting right now. In terms to the next question, Mr. K.N. Kumar, talk about more impact of anyone wants to exit in couple of years, say 2 years. Well, just to let you know, in a very nutshell, a quick, crisp thought process. What is a fraction ownership? Fraction ownership is basically by parking a fraction of a money, you become a co-owner of a big property. Let's say it's 30 crores, you park in 30 lakhs, you will receive independent papers to such a tune that there is no lock-in period for you. You can choose to exit at any given point of time. That's openly for you. And yes, we have been doing exits. Have people come for an exit? Yes, they do come because of some medical emergency or something. Please, not a problem with that. Mrs. Sandeep Donya Shetty, yes, I know you. I see property to be occupied once since 2022 with 5% escalation year on year. Will this 5% escalation applied for this IRR already, or will it happen later for this year? It is already applied 5% escalation in this the IRR, because the IRR actually includes not only the property appreciation and the rental escalation. Mr. Srinivas, what is the limitation of liability applicable for PSB share holders? So there is no liability because particularly number one, we don't allow lien in the property. We don't allow any other kind of a transactions. All you're receiving is CCDs and shares, and to a particular amount, which is basically ownership percentage of 1 to maximum 10%, wherein the liability does not reach out to. Any other additional point you would like to add in, Samir, on this particular point? Mr.
Uh,
Srinivas,
Sorry, what was the question?
what is the limitation of liability applicable for PSB share holders, investors? Mr. Srinivas
Uh,
M.
okay, I'd like to understand this question more because I don't really follow this question.
Yeah, so
But if you
PSB is
can,
something, I guess he wanted
yeah,
to mention SPV rather than PSB.
SPV.
Yeah, that's what I'm understanding. So there's no liability as such because,
No, so there is absolutely no liability on you
uh-huh.
because you are a CCD holder and equity at all. There is absolutely no liability.
Wow, I guess this one is a question for you as you started with this information. So, I mean, in order to control inflation, the interest would be hiked further once US elections are over. If you claim interest would go down, what will further lead to more inflation?
So, firstly, inflation is in control in the US. I mean, like I said, it's come down from 9% to 2.5%. And the Fed is very confident that their work for inflation has actually been done. So, even if the elections are over, we don't see them hiking at all. Like I mentioned, I expect the Fed to start cutting rates reasonably aggressively because the jobs data has been quite weak.
Great. So I'll just quickly run it up. What will be the monthly rental after tax deduction me if I invest privately for investment 30 lakhs? So very simple thing. Whatever money you want to invest, multiply that by 8.75%. That is your ROI. Divide that by 12. 12 months, and just minus that by 10%, which is the TDS. Again, repeating for everyone's benefit, whatever money you want to invest, multiply that by 8.75%, divide that by 12 months. That's going to be your returns every month, which is going to be gross. Post tax is something which is basically on your benefit, because there are certain customers who like to submit the 15GH form. In terms to private limited, yes, there will be a 10% TDS cut, sir. And of course, we have a 1% management fees. Deepak Padikar, what is ROI on investment? 8.75. Anonymous attendee, what is the tax
No,
applicable?
so just to add, Abhimanyu,
Mhm.
ROI in investment, obviously 8.75 is the rental, and
Yes,
then of course the capital appreciation,
of course.
which is another 7%. Yeah.
Right. uh, which totals up to 15.41% of the 15.12% targeted IRR. Uh, Anonymous attendee, what is the tax applicable once the capital is appreciated? Which is basically long-term capital gain tax, which is after 1 year, which is around 12.5%. What if it doesn't get converted into SM REIT? What would be the exit strategy then? However, if you see that we have already done a successful exit, well, this is some kind of a very, uh, question which will surely we not reach up to that particular thing, because our main thought process is surely to get the things listed. Even if it does not happen, we will surely get a successful exit in each and every property to talk about. Indexation is gone. How do you claim there will be indexation
So
benefits?
let me answer this question. Yes, we know indexation has gone, and we are not claiming there will be indexation benefits. The regime has now changed.
Exactly.
Earlier on, it was capital gain was 20% after 3 years for unlisted. In now, it's going to be 12.5%, and you can do it after 1 year. So that's the new regime which has come.
So indexation benefit is not there, of course.
No.
Company navigated market downturns or
Yes.
yes.
Yes, the answer is yes. I mean, we obviously there was COVID for 2 years. We did not have any issues around receiving rentals. There were absolutely no issues for 2 years.
Okay. Can you explain how migration to SM REIT works? What happens to existing investors and our CCD, and to what price will you list? Well, just to let you know, yeah, please, Samir, you want to say? Mhm.
Yeah. So effectively, the details are still being worked on with SEBI. This because for migrating to SM REIT, you also need a DMAT account. Everyone needs to have a DMAT account. So discussions are still going on. The listing will obviously happen based. So we will publish the NAV or the valuation of the property, and then accordingly will be listed.
Just an addition to a
Who-
point, which just to say is that every single property on our platform, okay, is at least 30 to 40% up as per the valuation reports. How will the how will bear the charges of
No,
migration
no.
and
Who will
who will
bear the charges
charges? Hmm.
of migration and compliance? We will be working very closely with the investors to make sure that the charges are absolutely minimal. And obviously, we'll be discussing with the investors before we actually migrate. There's also a question from Raghavendra: if the leased building gets demolished or gets harmed, any other ways, God will, what happens to the investment? Nothing happens to, there's no issue to the investment. Mainly because this obviously we cover, insurance will pretty much cover everything. If necessary, we will actually make sure that the building gets built again.
If 60-year-old retires, have 30 lakhs lump sum, is it safe to invest with you or regard or for regular income in your, or just put in FD? So in a regular way, the FD would give you return somewhere between 6 to maybe 8%, maybe 8.5%, as you're a senior citizen. Well, what we look forward to give you a regular cash flow into your account, which is around at as per 8.75%. But overall, if you look at a 5 year scenario, it comes down to 15.12%. And yes, it is very much secure and safe. And it is surely better than FD, which we look at around 2x of money if we reinvest it. It comes to around 2.25x of what you park money in FD, as per analysis, if you put in the Excel sheet. Ronak Rawal, how is the decision at the end of the life of planned property ownership taken? Is it pre-decided from exit or owners do a vote? Of course, since the property is yours, we have to take a consent. It does not happen in a haphazard manner. We go out in the market, get a particular proposal. Please remember that all the people who are parking money over here are all investors. And second, they all come here to invest and earn. So that's the way how we look at it. We go out in the market, there has to be a 75% voting right as a yes, and we go, then only go ahead and take the exit of the property. If there any one client who is occupying the complete building, or there are more than one client, we look forward to have just one floor. So it's just going to be one tenant per floor, and we will look at one tenant at one go. Anonymous question: indexation is gone. How do we claim there will be? We have not claiming that particular thing.
So let me take this one question, which is compare SM REITs with mutual fund returns. SM REITs returns are much better than fixed deposits. They're much better than corporate bonds, and they can be compared to large cap mutual funds, which give you returns of 12 to 13% over long periods of time.
Right. For calculation of IRR, is the rental at 8.75% or 7.75% after reduction of rent? So it is going to be at 7.75%. Team, if you shift to SM REITs and minimum numbers are 200 at 30 lakhs, size of you have around 96 members, we may not satisfy the conditions. So
let me answer this. So these properties which are done before the SM REIT will be grandfathered. And this, as you can see, is a smaller property. SM REIT says minimum is 50 crores. So a lot of these properties which will be done will be grandfathered. So you will
yes.
not have a problem. But yes, your question is correct. For the new properties, which we do, the minimum size will be 50 crores and we'll have 200 investors. Sensitivity risk around capital increase. Our team will share you the whole sensitivity table. Honestly, we don't expect too much of risk around capital appreciation.
Right. So yes, I guess almost all the questions are answered. I guess we just got one more. Suppose you want to exit for 3 years and how much price I may get investor of 30 lakhs. Well, you can always take the rental escalation as a price to price adjustment to the base price. So if it says around 5% annually, rental escalation, you can always take it as a 15% or probably around 15% on the property appreciation on 30 lakhs. Great. Well, thank you very much. And I see a lot of still questions coming up, but we just hold on to that since we have already overboard by around 5 minutes. Thank you very much for your time. Please reach out to your relationship managers, investment managers, or write to us. And please log into hbits.co website. As well as for regular updates, please follow us on LinkedIn. Thank you very much.
Thank you so much. Thank you.
Thank you.